So if you've ever tried to trade Forex on a smaller time frame, like maybe the 15 to 5 minute to even 1 minute chart, you may have noticed that it is a little bit difficult, mostly because Forex can be pretty volatile, and the lower the time frame you go on, the higher the spread begins to affect your trades. Well, in this video, I'm going to show you exactly how you can trade the smaller time frames in Forex, specifically on the technical basis. It doesn't get any easier when it comes to something like the spread. The spread will always start eating your account no matter what you do. It's just something you have to deal with and consider it a cost of business when it comes to trading. But if you're someone that's coming over from, for example, the stock market or the futures market where you like to trade in and out every single day, you're a day trader, then maybe you just know best to trade on the smaller time frames, and that's what you're most comfortable with. So in this video, I'm going to show you exactly how you can use smaller time frame analysis and larger time frame analysis to day trade Forex on the smaller time frames. Before we begin, all I ask in return for this video is a quick thumbs up and a subscribe, and also hit that notification icon so you get a notification every single time I post. Let's get into it. Okay, so the first step when trading on a smaller time frame is actually going to be take a look at the bigger time frames. A lot of people try to trade the smaller time frames and they completely ignore the larger time frames, and therefore they miss out on tons and tons of key levels that are found on the bigger time frames that you won't see on the smaller time frames. And the main thing that I use to find key levels on larger time frames is going to be a Fibonacci retracement. So what you want to do is go to your daily chart or 24-hour chart. And what you're going to see is that we have 2 days, right? We have our current day and then our previous day. So what you want to do is just take either the lowest point, so yesterday's low, to today's high, so low to high. That is if the trend is up, okay? So the way Fibonacci retracements work is if you're in an uptrend, let's just say you have an uptrend like this, and let's make a downtrend like this. Okay, so if you are in an uptrend and you want to use a Fibonacci retracement, you always want to go from low to high, and that gives you your support levels for this swing high. But if you're in a downtrend, it's going to be the exact opposite. You go from high to low. You go from high down to the low, and now you have your resistance levels. So these are all resistance levels on the Fibonacci retracement where price can bounce and continue down. And then on the uptrend, you have your support levels where price can bounce and continue up. So with that being explained, if you are in an uptrend like we are today in this example, right? We are in an uptrend, we are green, okay? So we know that we have to go from low to high. So what we do is we take our Fibonacci retracement tool, we go from yesterday's low, which is right down here, to today's high, and that gives us our key levels for the day. So let's jump down to a smaller time frame like the, like the 5-minute chart. Okay, so there we go. We have our low, yesterday's low, which is right here, and then today's high. So now we have all of these levels in play on our smaller time frame, which if you never even looked at the higher time frames, you wouldn't even know these levels were there, right? So now that we got our key levels, we actually need a strategy, right? I mean, we can't just trade without having any idea of what we're going to do. So I'm going to be giving you the strategy that I recommend to all beginners because it's a really simple strategy and a really effective strategy. But again, it's very simple, so it's not going to blow your brain out. So let's take a look at this strategy. It is an uptrend or downtrend following strategy. And if you've been subscribed to this channel for a while, you know exactly what I'm going to talk about because I've talked about it many times. I talk about it in almost every video. But the strategy is very simple. If you are in an uptrend, as in you are making higher highs and higher lows, then you're going to be buying the pullbacks on each swing wherever you find the most support at. And then if you are in a downtrend, you're going to be shorting the pullbacks each swing on where you find the most resistance at. So, and then you target that lower low or that higher high. So basically you buy in here and you try to sell up here, and you just keep doing that. Buy in here, sell up here, short in here, cover in here, short in here, cover in here. While it may sound a little too good to be true and too simple, trust me, it does work. I mean, it's the trend, the market is trending. a good portion of the time, and you actually have about a 60 to 70% chance of making a higher high whenever you get a higher low, and whenever you make a lower high, you get a 60 to 70% chance of making another lower low. So with that being said, let's take a look at this scenario that we are in. We have our main levels, right? Our daily key levels. So these are going to be in play for today, and we want to be aware of them because they are, again, main levels. Then what we're going to do is identify our swing. So our main swing right now is going to look something like this. We have a move up, a move down, and then a move up. Okay, and that is just keeping it very simple at just identifying the clearest move, right? This is definitely the clearest move on this chart. If you wanted to complicate it, you could say technically that, it starts down here and we get that move up, that move down, then we get a move up, move down, and move up. Okay, you could technically do that. It doesn't really change all that much. It'll just change where you're going to put your Fibonacci retracements, which we're about to go over right now. So now that we have our main swing, which for this example, I'm just going to use this move right here. So our main swing is going to be this one right here. Why is that our main swing? Because this is the main swing that broke through the previous high. So this is our higher high, right? This swing created our higher high. So now we expect what? A higher low and then continuation up. So let's take a look at the Fibonacci retracements. So this is what I call the immediate Fibonacci retracement. So on our larger time frame, we have our main Fibonacci retracement, right, for the daily levels, and then the immediate Fibonacci time frame is the one you use on your main swing. So since we're in an uptrend, like we went over previously, we go from low to high. So now we just drawn up more Fibonacci retracement levels and more support levels. So I know it looks a little confusing, lots of lines, but all we want to look for now is basically the place within this swing that has the most convergence of our support levels. So basically, let's take a look right here, right? We have a high and a high here and a little tiny high there. So this is a major level of resistance that was just broken out of, right? Well, what do we know about support and resistance? When resistance breaks, for example, like this, right? We have resistance. When resistance breaks, this is our resistance level right here. Once we break, what tends to happen? Well, it tends to become support and you bounce and continue higher. So that's exactly what we're seeing in this case, right? We have our resistance level right in here. And let me just draw that out for you. I'm actually going to make a box because that's always how I do it. Okay, let's just draw out these levels of resistance. Remove that. Okay, so that was the level of resistance, but we broke through it, right? So now this is a level of support. This little box you see here is a level of support that we can now use to trade on the long side. Instead of trying to short that resistance, now we're going to buy at that support. So that is definitely the clearest level of support on our chart as far as the physical chart goes. But then we have Fibonacci support, right? We have structural support and then we have Fibonacci support. Well, where do we see the most convergence of Fibonacci levels? It's actually going to be right in here within this blue box. The reason why I say that is because one, we have, we have that the 50 to 61.8 on our immediate swing here. Okay, so I know it's difficult to kind of differ the Fibonacci retracements, but these ones right here are the daily Fibonacci retracements. These right here are the immediate Fibonacci retracements. So you can see we got the 50 and the 61.8 Fibonacci retracement within actually our big support level. Okay, and then we have one of the daily levels right here within that blue box as well. So this general area that we just highlighted is going to be where we want to look to enter because that's the highest chance of having some sort of reaction from the price to the upside. So what we expect is something like this to happen, right? We expect a move down and then continuation higher, aka a higher low and then a higher high. So let's get rid of that. And let's see what happens. Let's say we're going to enter this trade. Let's just put it right at the middle of this blue box there. Let's put our stop loss, let's put it below the 61.8 way down here. and then let's put our target right towards the highs right in here. Okay, just to keep it really simple. So let's see what happens now. We're going to play it forward. You can see we got entered into the trade. We got into some drawdown, but now it's coming back up, and let's see what happens. I'm going to just play it. Not sure how long it's actually even going to take. And it's going to take longer than we thought. Let's draw this out forward. And there we go. So now notice a few things that happened here. One, okay, we didn't bounce perfectly at this level. On the first attempt, we actually broke through it and then bounced after that. But take a look at where price actually ended up bouncing. The exact low of this bounce actually ended up being a major daily level combined again with an immediate level. So if you weren't even aware of this 50% retracement, which is on the daily, this is a daily 50% retracement. If you weren't aware of this level, then you would have never even guessed that this is an area where price even had a chance of buying or of bouncing. So you may have put your stop loss right here, maybe. You know, if you aren't aware of these levels, the key to this video is just you got to be aware of these larger time frame levels and trade with them in mind, because if you don't, then you have a chance of just completely, messing up your trade because a big level's staring you right in your face and you don't see it. So look at what happened. It bounced at this 50% retracement, and I guess you could technically say it bounced at this 786 as well, which is on the immediate Fibonacci retracement. So now let's take a look at what happened the second time around. Look, we actually bounced and then we came back, and where did we come back to? Right back into our main zone where we were looking at buying, or we did buy. And look at where it bounced. It bounced right at that daily 382. If you can see it behind the entry point there. A little difficult to see, but this 382 right here is on our daily chart, and that was another main level. So the two places where price ended up bouncing ended up being daily Fibonacci levels that if you didn't know they were there, if we just took this away, we would not know of these levels, right? They would just be, there would be nothing unless, this one you can technically get away with just saying, okay, yeah, it's the support level because we drew it out prior. But other than that, you just wouldn't know that these levels are there, and that's definitely going to hurt your trading. They can only benefit you in your trading. They give you extra levels to look at and definitely some strong levels of support. As you can see here, we already bounced at the 50 and the 382 almost to the T, and it allowed us to have more confidence in our trade and more confidence in our levels. Alright, so that is how you trade smaller time frames on Forex. If you enjoyed the video, make sure to like and subscribe and hit that bell notification icon, because that's really the only way that I can stay motivated to keep posting the content like this. And as always, if you want to join our free Discord or our MW Academy, links as always in the description down below. I will see you guys in the next video. Peace.